An 11-year-old boy in Omaha stands before an old Coca-Cola vending machine, counting the few coins he earned from selling newspapers. He wasn't born special, he wasn't a math prodigy, and he never dreamed of becoming a billionaire. He just held on to one simple belief. If he could keep his little snowball rolling a bit further every single day, someday it would grow big enough that nothing could stop it. 70 years later, that snowball has a name, Warren Buffett, and it has become one of the greatest fortunes the world has ever seen. But the real miracle isn't the hundreds of billions of dollars, it's the philosophy behind it, that wealth isn't a game of speed, but of depth, consistency, and faith in time. In a world obsessed with getting rich fast, Buffett chose to roll slowly and steadily. He never chased trends, never gambled on luck. He simply believed in the quiet power of compounding, of money, of knowledge, and of reputation. That's the soul of the snowball, Warren Buffett, and the business of life. It's not just the story of an investor. It's a roadmap for anyone, even those starting from nothing, to build a snowball of their own. Because in the game of wealth, the winner isn't the one who moves the fastest, but the one who keeps their snowball rolling the longest. Part 1. The Snowball Philosophy. On a snowy hill in Omaha, Warren Buffett once said a simple line that would later become iconic. Life is like a snowball. The important thing is finding wet snow and a really long hill. A snowball, if it rolls long enough down a steep enough hill, grows from a tiny handful of snow into a massive force, and that's the perfect metaphor for Buffett's entire life. As a boy, Warren didn't have a million-dollar idea. He just had the habit of adding things up, saving every coin, every paper he sold, every book he read. While his friends dreamed of becoming pilots or baseball players, Warren was obsessed with the numbers in his savings ledger. He discovered that money could make more money, and if he gave it enough time, he'd never have to work for it again. The so-called Snowball Philosophy didn't start with investing. It began with a way of thinking, understanding that everything great starts small, and that most people fail simply because they don't have the patience to keep rolling. Warren never tried to get rich quick. He never needed one big win. He chose steady, boring, but solid investments because he knew that time is the strongest ally of the consistent. Every financial decision, every annual report he read, every conversation with Charlie Munger was just another roll of the snowball. No one could see it growing day by day, but over the years, it became unstoppable. This philosophy goes far beyond money. Buffett rolls his snowball through relationships, knowledge, and reputation. Each time he keeps a promise, he compounds trust. Each book he finishes adds another layer of wisdom, and together, those values form what he calls a compound interest of character, the interest on integrity. The beauty of the snowball philosophy lies in this. Anyone can start it, but not everyone can keep it rolling. Because to keep it moving, you have to accept that most days will look unchanged, and yet believe that someday all those small efforts will add up to something great. Warren Buffett once said, "You don't need to do extraordinary things to get extraordinary results. You just need to do ordinary things extraordinarily well." And that is the essence of the snowball philosophy. It's not magic, it's not genius. It's patience, belief, and time. Three things most people lose in the race for speed. To Buffett, wealth isn't a destination. It's the natural outcome of steady accumulation, of a snowball that never stops rolling, and of a man who never stopped believing in the power of small, consistent steps. Part 2. The Origins of Compound Thinking. If there's one mindset that defines Warren Buffett, It's not the investor's mindset. It's the compound mindset. The story begins in Omaha, sometime in the 1940s. A 10-year-old boy sits at the kitchen table, reading a worn-out library book called 1,000 Ways to Make $1,000. While other kids are outside playing, he's busy taking notes on how money moves, how every small decision today could grow into a much bigger opportunity tomorrow. That was the first time Warren Buffett understood compound interest, and he didn't see it as a math formula, but as a law of life. He realized that everything in life, money, knowledge, even trust, can multiply exponentially if you nurture it with patience and consistency. So, he started practicing that mindset in small, practical ways. When he invested $10 in a used pinball machine and placed it in a barber shop, he wasn't thinking about the profit for the week. He was thinking about how to make money work for him. Then he used that profit to buy a second machine, then a third. That's compound thinking in action, understanding that every repetition is a step closer to freedom. As he grew older, the philosophy didn't change, it just expanded. Buffett applied compound thinking to learning, reading, and relationships. Every page he read was an intellectual investment. Every conversation with someone smarter was compounding experience. He wasn't searching for a big leap. He was focused on the quiet accumulation of small, right actions. Charlie Munger, Buffett's lifelong partner and intellectual soulmate, once said a line that Buffett truly lived by: "Take a simple idea and take it seriously." For Buffett, compound thinking was that simple idea, a principle so ordinary, yet it became the foundation of every financial success and every life philosophy he built. Because while the world keeps chasing faster strategies, Buffett understood that greatness is born from persistence. You don't need to be smarter than others. You just need to be more patient than they are and let time do its work. That's the difference between those who are truly wealthy and those who merely look wealthy. The rich think in compound cycles. Others think in instant returns. Buffett turned this mindset into a complete way of life, a system that shaped every decision he made, from which companies to invest in, to how he spent his money, to the kind of person he chose to marry. Every choice returned to one simple question: will this add value to the future? Compound thinking is how Buffett views the world, not in terms of tomorrow, but in terms of 50 years from now. Not what will I gain right now, but what will this become if I do it right today? Maybe that's why Buffett still reads 500 pages a day, still lives in the same modest house in Omaha, and still has breakfast at McDonald's. Because he knows wealth is never the reward of speed, but the result of steady compounding. Part 3. Meeting Benjamin Graham, the man who planted the seed of value investing. If compound thinking was the foundation that built Warren Buffett, then Benjamin Graham was the man who gave him the map to go further. When Buffett was a young student at Columbia University, he came across The Intelligent Investor, the book later known as the Bible of value investing. From the very first pages, Buffett felt as if he had found someone who spoke his language. He once said, "Before I met Graham, I was investing in a fog. After I met him, the fog lifted." Benjamin Graham wasn't just a finance professor. He was a man who had lived through the wildest swings of the American market, a man who was rich before the Great Depression and then lost almost everything in 1929. But from those ashes, Graham discovered a timeless truth. In the short run, the market is a voting machine. In the long run, it is a weighing machine. When Buffett met Graham, he didn't just learn how to read balance sheets. He learned a philosophy of life.
to see the world through the lens of intrinsic value, not through the noise of stock prices. Graham taught him that investing is an art of reason and discipline, not a game of emotion or luck. Don't let the crowd decide what your values are. Know what you own and know why you own it. In Graham's classroom, Buffett sat in the front row, taking notes on every word, every example. He didn't just admire his teacher's knowledge, he respected his calm and steady character. Here was a man who had survived chaos, and yet still believed in the quiet strength of true value. That was the kind of man Buffett wanted to become. After graduation, Buffett took a bold step. He wrote a letter to Graham offering to work for him for free, just for the chance to learn. And Graham, a notoriously private and demanding man, said yes. And so the boy from Omaha began working at Graham-Newman Corporation in New York, the place where Buffett's understanding of investing was forever transformed. One of the most profound lessons he learned there was the concept of Mr. Market, a fictional character Graham created to represent the market itself. Every day, Mr. Market knocks on your door offering to buy or sell your stocks, sometimes at absurdly high prices, sometimes at laughably low ones. Buffett realized, my job is not to argue with Mr. Market. My job is to take advantage of his moods. That idea shaped him for life. Never let emotions dictate financial decisions. Value investing isn't about chasing hot stocks, but about finding real businesses with real foundations and buying them when their price falls below their true worth. Graham taught Buffett to look at a company as if it were a person, to understand its history, its culture, its leadership, and above all, its financial character. Those years with Graham became the great turning point in Buffett's life. But perhaps the most important lesson was this: Buffett didn't just learn to imitate Graham, he learned to evolve from him. He later said, "Graham lit the lamp. I just learned how to carry it further." From Graham's foundation of value investing, Buffett developed his own philosophy, a blend of value and quality, of calculation and business intuition. If Graham taught him how to find good stocks, life would teach him how to find great companies. And that was when Warren Buffett's snowball truly began to roll, slowly, steadily, and with no intention of ever stopping.
Part 4. From Investor to Builder. When Warren Buffett left Benjamin Graham's firm, he didn't just carry with him the lessons of investing. He carried a quiet fire inside. How could he turn value investing into a philosophy for life, not just a financial strategy? In 1956, he returned to Omaha with nothing but an old desk, a small circle of trusted friends, and an idea few could understand: to create Buffett Partnership Ltd. There were no fancy offices, no logos, just handwritten letters to investors, humble in tone but razor-sharp in conviction. I don't promise quick profits. I only promise that I will invest your money as carefully as I invest my own. Buffett began his journey not through flashy deals, but through quiet accumulation, rolling his snowball one turn at a time. He invested in companies the market had forgotten, buying when others were afraid, holding when others were bored, trusting that real value would eventually rise to the surface. But then, something changed everything. One day, Buffett bought shares of Berkshire Hathaway, a dying textile mill in New England. At first, it was just another buy low, sell high deal. But when he saw how poorly the company was run, the inefficiency, the wasted potential, Buffett had an epiphany. Investing wasn't just about owning stocks, it was about owning businesses. From that moment, he began to transform. He was no longer just a value hunter like Graham. He was becoming a builder of value. He started to view businesses the way he viewed people. Does it have a strong culture? Is its leadership built on integrity? Are its cash flows sustainable? And most importantly, can it survive the storm? Buffett began acquiring companies he truly believed in. GEICO, See's Candies, The Washington Post, Coca-Cola. Ordinary names on the surface, but each one a quiet, honest money machine underneath. He didn't micromanage them. Instead, he empowered great leaders, people he called artists of business. He believed, if you hire good people and give them freedom, they'll create results you could never imagine. This was the moment Buffett stopped being just an investor. He became a financial architect. He built the Berkshire Hathaway ecosystem as a house of trust and true value. Each company became a brick, solid, steady, and focused on doing one thing exceptionally well. And slowly, the miracle unfolded. That small snowball from Omaha began to roll faster, grow bigger, and become unstoppable. Profits turned into new capital. New capital created more value. Just like snow layering upon snow, each layer thicker than the last, a perfect compound cycle of money, people, and trust. Warren Buffett once said, "I don't want to be the richest man in the world. I want to be the one who understands money the best, how it works, and how it can serve people." And he did just that, by evolving from an investor to a builder, from seeking opportunities to creating them, from picking stocks to choosing people, from earning money to building value. That was the turning point that made Warren Buffett a legend. Not because he had a secret formula, but because he discovered a simple, profound truth. Money doesn't create more money. People, systems, and trust, that's what keeps the snowball rolling forever. Part 5. Simplicity, the secret of true genius. Warren Buffett once said, "Every genius knows how to turn the complex into the simple. The amateur does the opposite." In a world of investing crowded with charts, tools, and forecasts, the old man from Omaha still sits in his modest office with a can of Coca-Cola, a few printed newspapers, and a pencil. No supercomputers, no army of analysts, just a clear mind and a set of unshakable principles. People often ask him, "Why don't you invest in fast-growing tech companies?" Buffett simply replies, "I don't invest in what I don't understand." That simple line has been his fortress, protecting him from dozens of financial bubbles through more than 70 years of investing. He understood that in a noisy world, the winner isn't the one who knows the most, it's the one who can ignore the most. Buffett has a rule he often repeats, the circle of competence. It doesn't have to be large, it just needs to be clear. Stay within the circle you truly understand and don't let greed pull you out of it. When Wall Street threw billions into .com stocks in 2000, Buffett quietly stayed on the sidelines. They called him outdated, the old man who doesn't get tech. But a few years later, when the bubble burst and companies collapsed, Buffett stood firm, and Berkshire Hathaway kept growing steadily. That wasn't luck, it was the power of disciplined simplicity. He once told Charlie Munger, "We don't have to know everything to succeed. We just need to know a few important things and act on them consistently over time." That mindset helped Buffett avoid the trap of being too smart for his own good. He never tried to predict oil prices, analyze quarterly interest rate moves or chase the next 10x stock. Instead, he asked deceptively simple questions. Is this business easy to understand? Does it have a durable competitive advantage? Are its leaders honest and consistent? And, most importantly, if the market closed for 10 years, would I still be happy owning this company? That last question is the essence of value investing, because Buffett knows stock prices are noise, but value is music. The same simplicity shapes his personal life. He still lives in the same old house he bought in 1958, drives a modest car, spends hours reading every day, and builds his life around clarity and peace of mind. He's never been seduced by the flashiness of wealth. Buffett once said, "If you can't find happiness in a Toyota, you won't find it in a Rolls-Royce." To him, simplicity is the highest form of intelligence, not because it lacks depth, but because it comes from understanding deeply enough to strip away everything unnecessary. In investing, in life, and in thought, Buffett has proven that genius isn't about doing more, it's about doing what truly matters. Not about making things complex, but keeping them pure, focused, and clear. And perhaps that's why his snowball never stops growing, because it's built not on risky leaps, but on small, deliberate, and lasting decisions. In a world full of financial temptations, Buffett chose to move slow and steady, and it's that very simplicity that made him the rare genius of sustainable success. Part 6. Money versus meaning, when money is no longer the goal. When Warren Buffett turned 70, a journalist asked him, "Is there anything left you still want to achieve now that you're one of the richest men in the world?" He smiled softly and said, "Money was never my goal. It's simply the byproduct of doing what I love." That answer sounded light as air, but behind it lies a lifelong journey, a quiet dialogue between money and meaning. From a boy who loved numbers to a man who understood people. As a boy, Buffett was fascinated by numbers. He would sit alone for hours, jotting down compound interest tables, profits, and stock quotes. While his friends played baseball outside, young Warren was happiest with a calculator and a stack of financial sheets. To him, money was the most exciting game in the world, a game where those who calculate well win. But as his snowball rolled farther and larger, and money stopped being a problem, he discovered a deeper truth. The game only matters when it creates value for others. From accumulating to giving. Buffett often says, "When you're lying on your deathbed, no one reads your bank balance. They remember who you were and what you gave them." That belief became the foundation of the Giving Pledge, a commitment he co-founded with Bill Gates, urging billionaires to donate the majority of their wealth to humanity. In one of his shareholder letters, Buffett wrote, "I've spent my life accumulating wealth, but I don't want to die leaving behind a pile of useless gold. I want that money to keep working, not for me, but for the world." It was a profound transformation from being the greatest wealth builder to becoming one of the wisest givers. And in that shift, Buffett found a new kind of joy, a purpose beyond numbers. True freedom doesn't live in a bank account. Many people dream of living Warren Buffett's life, financial freedom, power, fame. But if you look closely, you'll notice something ironic. He lives more simply than most middle-class Americans. The same modest house in Omaha, a $3 McDonald's breakfast, and his daily can of Coke. Buffett doesn't live frugally because he's cheap. He does it because he has nothing left to prove.
He once said, "You're only truly rich when you can live the way you want without doing what you hate to impress people you don't even like." Money gives him freedom of choice, but meaning gives him a reason to wake up every morning. The art of living after success. Even in his 90s, Buffett still goes to the office every day. He reads 5 newspapers, has lunch with Charlie Munger, and gets excited like a young student discovering a great company. He doesn't work because he needs more money. He works because he loves the process. To him, working isn't about getting rich. It's about continuing to play the game he loves most. If you're doing what you love, you'll never work a day in your life. That's how Buffett sees the world. Money is the reward. Meaning is the purpose. And when those two align, you become wealthy, not just in your account, but in your soul. From snowball to legacy, when wealth leaves a trail. In the end, the snowball isn't just about accumulating assets. It's about accumulating values. Money can compound, but kindness and impact compound even faster over time. Each act of generosity, each opportunity shared becomes another snowflake in humanity's growing snowball. And long after we're gone, that snowball keeps rolling, carrying the meaning we leave behind. Warren Buffett has shown the world that the richest person isn't the one who has the most money, but the one who understands why they have it and what it's for.
Part 7. The snowball mindset for each of us. Not everyone can become Warren Buffett, but everyone can learn how he sees the world. Because the snowball isn't just a metaphor for wealth. It's a metaphor for how you live, think, and build value every single day. 1. Every small action is a snowflake. Warren Buffett didn't start with millions. He started with $100 and a used weighing scale for candies. No inheritance, no special advantage. What he did have was a small set of habits, repeated thousands of times. Every financial report he read, every market observation, every careful investment decision, they were all tiny snowflakes he gathered day after day. And over time, they fused into a massive snowball of knowledge, discipline, and belief. You can start the same way, by thinking long-term, keeping promises to yourself, and improving just 1% each day. Because the magic of a snowball doesn't come from how fast you roll it, but from your patience to let it grow. 2. Create value first. The rewards will follow. Most people ask, how can I make more money? But the wealthy ask, how can I create more value for others? That's the difference between those who chase money and those whom money chases. When you help others solve problems, when you make the world just a little better, you're compounding real value, and money naturally follows. Look at Buffett. He doesn't hunt profits. He builds great businesses, helps them grow sustainably, creates jobs, and helps millions invest more wisely. That's why capital flows toward him, because he does what the market always respects. He creates real value. If you help enough people get what they want, you'll have everything you ever wanted. Zig Ziglar. That's the spirit of the snowball. Value spreads first, money comes later. 3. Choose the right hill for your snowball. Not everyone is rolling their snowball in the right place. Some people pick a hill that's too short. They trade time for money, doing the same task every day, never letting their snowball grow. Others roll on the wrong slope, chasing trends, rumors, or quick profits. Buffett chose a hill made of knowledge and time. He invests in things that grow stronger the longer they exist, not weaker. For us, the question is the same. Which hill is my snowball rolling down? Is it growing or melting? Your hill might be your career, your skills, your relationships, or your business. What matters is that it's long enough, strong enough, and always pointed toward creating real value. 4. When you create enough value,
money stops being a problem. Warren Buffett never chased money. Money chased him. Because he understood one simple truth that most people overlook. Money is the reward for those who create real value and have the patience to let that value be recognized. If you focus on meaningful actions, if you pour your energy into doing your best work, the world will eventually reward you. Buffett calls it compound trust, trust that builds up over time. You trust you, the market trusts you, and eventually, money trusts you. 5. Your snowball is rolling every day, whether you notice it or not. Every decision you make, every habit you repeat, is another turn of your life's snowball. It may grow slowly, but it will grow if you stay consistent, keep learning, and focus on giving more than you take. Because in the end, wealth isn't about how much money you have, but how much value you leave behind. Money will come as a reward for those who never made it the goal. In the end, Warren Buffett once said, "Life is like a snowball. The important thing is finding wet snow and a really long hill." For you, that hill might be your passion, your purpose, or the value you want to share with the world. Start today, even with just a single snowflake. Because when you create enough value and let it spread, money will become the reward that finds you. Warren Buffett didn't become a legend because he was smarter than everyone else. He simply stayed persistent, stayed disciplined, and believed that every form of value, when nurtured long enough, will eventually multiply. His wealth isn't just in stocks or businesses. It's in the way he sees the world. When others demand results now, he chooses lasting effectiveness. When others chase big deals, he seeks big meaning. That's the Snowball Philosophy, a simple idea that can shape your entire life. Take a moment to pause and ask yourself, where is my snowball rolling? What kind of value are you creating every day? What are you building that grows stronger with time instead of melting away as the years go by? Because true wealth isn't about how much you have, but it's about what remains after you're gone. If you want to dive deeper into this philosophy, to understand how Warren Buffett views money, investing, and life as a journey of growing value, I'll leave the link to the book, The Snowball, in the description below. Read it, because somewhere in those pages, you might just find the moment when you start rolling your own snowball.